Hi, welcome to this video day. It's the 13th of February. We're on Sunday. This is our weekly Forex forecast. In this video, we're going to pick out some of our favourite pairs for the week ahead, which we think could offer good risk to reward trading opportunities. We've got quite a few charts to look at. Go over them in just a moment. Also in this video, I want to look at trading emotional price spikes driven by sentiment. Now, emotional price spikes are always great to trade and look for reversals. Now, if you can time your entry correctly, you can get really good risk to reward trades. So we'll go through some tips in terms of trading reversals. In terms of the markets, we have seen some volatility last week. I think the volatility now will pick up. We've got inflation 40-year highs in the US. It's high all around the world. We've got central banks looking to tighten financial conditions. That historically creates volatility. We've also got geopolitical tensions in focus between Russia and the West. And in terms of stock markets, we saw weakness last week. If that weakness continues or accelerates, that will spill over into FX markets. So it should be an interesting week ahead. So let's go and take a look at the charts. Before we do so, though, just keep in mind, it is my view. As of right now, it can, of course, change in line with market action and conditions. If you want to learn all our trading techniques, check out our strategy and also our daily technical sentiment analysis of 14 FX pairs. All you need to do is click on the link beneath this video and get live access to our member center. You can also follow us on Facebook and join our Facebook group of traders as well. And finally, check out our recommended regulated broker. Now, in terms of the charts, I've been doing updates in the member center this weekend, so I'm going to use the charts from there. So let's go over and take a look at them. Euro USD, our first pair. Now, in terms of Euro, you can see a big rally up towards the 115 level. Sentiment-driven rally, and we thought the rally would fade, and we faded back a bit, but I think there's way more downside to come. And in terms of playing this pair, if you wanted to trade it from the short side and agree with our view, I'll go through some levels in a moment. But first of all, I want to go through why there was the big price spike to 115 and why we thought it would fade. Now, in terms of this chart from Bloomberg Opinion, it says from dubs to hawks in 4 weeks, market discounting 4 rate hikes after the ECB meeting, which caused the move up towards 115. Now, quote here, it says, at the beginning of the year, traders prepared to believe Lagarde, that's Christine Lagarde, the ECB president, when she said that even one 2022 rate hike was unlikely. Now they are braced for 4. We thought the rally or the market a little bit too optimistic about 4 rate hikes, okay? And Christine Lagarde did come out after the meeting and say we're in no hurry to raise rates. We're concerned about higher borrowing costs. And she noted a spike in bond yields on the periphery of the zone, that's in countries such as Italy and Spain, and said the ECB would act if necessary. Now, if you want to bring bond yields down, you've got to do stimulus, and stimulus has got to end before the ECB can do rate rises. You can see they're printing money at a rapid rate. This money is needed to support the poorer nations. And you can see how concerned they are about Italy and Spain by saying they'll act to bring bond yields down. So it looks like rate hikes could be a little way off, and 4 looks a bit optimistic. So we kind of thought the good news was in the price. And if we look at the price action, there's the big ECB candle, okay? Then we have a little follow on the next day. It's an unconvincing candle. We think the good news is probably in, so we'll sell. One last push of the bulls there in our view, and then down on Friday. So just a minor profit at the moment. Actually, in terms of our last forecast a few weeks ago, we'd been short the euro, took out half at the bottom, then half on this blue that took out the red. We actually thought the euro would fall back. The rally was a sell. We should have bought it, okay? But yeah, we're in short now. Plenty of downside potential. Daily chart lows, you can see at the top, I'm looking for 110, then 105. Now, also in the mix is Russia, Ukraine. It's a tense standoff between Russia and the West. Biden and Putin spoke this weekend. I saw Biden threatening Putin with sanctions. That's nothing new. But Putin can actually react if that did occur. Okay, he can basically cripple Europe by cutting off the energy, can't he? We hope it doesn't come to conflict, but I think that tension will weigh on the euro as we come in to the new week. And if there is confrontation, the euro will absolutely tank. Okay, but in terms of where we are now, also I forgot to say, market a little bit too hawkish about the ECB and rate hikes. They're not hawkish enough about the Fed. So just feel the euro's got limited upside and good potential downside. Now, how would you play this pair? Well, if we rally back to this double trend line resistance here, you could look to sell off it. Okay, if not, come in through the low. Now, if you come in through the low, I think the stop needs to be at 115.20. That's where we're going to bring our stop to if we fall. So just tight behind this tail. We've got it a little bit looser at the moment. But if we really start gaining traction to the downside, take out 113, stop can go behind 114. Plenty of downside. We've got 110, then 105, which are monthly support levels. You can see here why I picked out 110. I think that's realistic. Russia, Ukraine, maybe risk off in financial markets down to 105. Okay, but 110 I think is a good target. Obviously, we've got to take out daily lows. Now, in terms of the next pair I'm going to look at, it's another euro pair. It's going to be Euro JPY. All right, Euro JPY. Now, in terms of this one, there's the big blue ECB candle. And then a little bit of follow through, just like in terms of Euro USD. I thought that was worth a sell. It doesn't work out for me, get stopped out for a loss. Now, in terms of when we poke up here, we're happy to go again. We've tested these candle highs over here, got through a round number, no more buyers. Round number is always important for order flow. We exhaust back, come back within an outer Bollinger Band, the orange line. Now, when the bands are wide, we'll very often sell back within the band, okay? Or bands. We've done videos on this, you can check them out. And we do get a nice fall on Friday. It's about 160 pips on this one. And we're looking for more downside. So how would you play it if you wanted to get into this trade? Well, my own view is if we rally back to resistance, you can sell off it or just take a break. A new low open. Okay, so if we open below the previous close, look to sell. Okay, I think we're going to go down to chart lows. If we really get away from the 130 level, I'll probably bring my stop behind this first level resistance. We'll see how we go. But yeah, downside towards chart lows. Yen, basically is oversold. Speculators are heavily short of the yen. You're moving into a little bit more risk-off environment now, which should favour the yen. We shall see. But so far so good with this one. We'll see where it goes. Then let's look at some USD pairs. And I want to look at what I looked at last week. It hasn't done too much yet, but I think it will. It's USD CAD. USD CAD. I did a video on CAD pairs last week. I'll update the crosses in this video as well. But in terms of what's happened since last week in USD CAD, not much at all. We're just kind of chopping around, but we're holding this big support level here. Okay. Now, if you look at the price action, it doesn't look that exciting. When you look at the sentiment behind the chart, in our view, it points to the USD really moving to the upside. Now, in terms of the market, very bullish on the CAD. They expect a really hawkish Bank of Canada. That's priced in. A lot of talk about crude oil going to 100 or more and supporting the CAD. But if we look at what's happened over the last few weeks, the USD is holding this support level, but oil's been very strong. Look at that. It's almost up at 94. Could easily reach 100. There's a lot of speculators in crude buying against the potential conflict between Russia and Ukraine, saying crude will go to $100 a barrel if that occurs. I think it'll go even higher. But that's not going to help the CAD, okay? If we look at the price action, hasn't helped the CAD over the last month, has it? Okay, if it did spoke to 100 or even more crude oil, CAD would gain no strength because you get risk off. The USD would rally as a safe haven, okay? So in terms of this one, we're not far from entry. It is choppy. How would you play it? My own view is I'd have a little trade in and maybe add, or I would add above 1 28, a round number. We poked up to it here, got through, came back there, nearly there, goes through again, 130, then 135. Also, if we drop down below 127, I would just buy 127.20. So not much has happened in this pair at the moment. We've got a small trade in and we are looking to add. Okay, now what I want to do, I'll do look at some CAD crosses in a moment, but what I want to do is look at my favorite USD pair. So we are on US dollar Czech krona, USD CZK. This is our favorite pair, has been since mid-January, and we featured it in a few videos, and we really like it. It's got our biggest risk allocation, and it's a nice volatile pair. Now, in terms of the pair and the sentiment, we got really interested in it when it came down here. Looking at the reason, Czech Central Bank raised rates to 3.75%. Then speculators get a little bit too optimistic about what the Czech Bank may do going forward. They anticipate rate hikes to 4.5%. They all pile in short, and we're waiting for a reversal. We get it on the blue. New tail low, nice strong close to the upside. Bank 50% into 22 and take the rest out on the break of 21.80. Yes, nice volatile pair, this one. When we got through 21.80, I actually thought, we'd just buy back through. It's bound to bounce. It didn't. It just ran on to the downside. Dollar was weak in this period, and the market, really hawkish, or looking for a hawkish Czech Central Bank. They used the bounce to load up on shorts, and we get pushed to a new daily low below the previous, and we think, again, selling is overdone, will take some strength. We get in at 21.31, and now we've moved up. Okay, nice and strong on Friday. Also, when the euro is weak, it can very often spill over into the correlated currencies, and of course, when the euro is strong, it can influence the correlated currencies. So, in terms of this one, I think that's a nice decisive break to the upside. If we open at a new high in the coming week, a buy and the stop could be behind this first level support. So not much risk, plenty of upside potential. If we dip back and you came off that level, first level support, stop behind. Second, plenty of spec short, 22.40 is on the cards. If we get risk off, we could run on all the way back up to chart highs. Always looking for those currencies that, are strong everywhere. Like, the CAD has been pretty strong. Czech krona, strong everywhere. Look for the reasons behind and see if it's worth going the opposite way. In terms of the Czech krona being strong everywhere, it's even strong on the euro here. Then you get some choppy price action. Euro breaks higher on Friday. If you're a euro bull, you could buy this one through the high, stop behind first level support, or buy off first level support, stop behind second. Okay. Now, in terms of another USD pair I like, it's another euro correlated currency, is USD PLN. We've been playing this one in a similar way to USD CZK. It's got slightly less risk on it, but bought that bounce, stopped out, down to a low, get a nice entry here on the big blue, move through to the upside. Now, in terms of this one, it's similar. Through the high, stop behind first level. If you're buying a dip, stop behind second level. Looking for a move up to 420. Then up here, where my cursor is, to monthly resistance at 430. Okay. Now, in terms of Ukraine-Russia standoff, I think the Polish zloty, because it's so close to Ukraine, would be hit really hard if tensions escalate. Okay. So another lesser looked at pair, but always good to look at. The nice and volatile, very often give you some good opportunities. Right, now let's have a look at some CAD pairs. An update last week's video. I want to look at AUD CAD first. From AUD CAD, in terms of the commodity currencies, we think the AUD will be the strongest of the major commodities, be the strongest going forward at this moment in time. CAD overbought will be the weakest. Actually, NZD CAD looks a buy as well. But I'm just going to cover AUD CAD in this video. You can check NZD CAD for yourselves. But big fall down here. And I was saying in the last video, we tried along here, get stopped out, come down to a new daily low. We want to buy strength. We get it. move up, tail exhaust, and then we were just clipped on the tail. That's so disappointing. We're now flat with just 100 pips, okay? But I think there's more upside in this one, and we've reset our entry above this double top, stop behind the tail low. Plenty of speculators short, looking for a move up to 93. So it's near enough a 4-to-1 risk to reward, and I think the probability is high on this pair if we break higher. If we break lower, I'll reset entry. But at the moment, I see it as a buy on strength. Let's go and look at another pair we looked at last week, which is going to be GBP CAD. Now, in terms of GBP CAD, choppy price action here, okay? Hammer out support, move up above these two bodies. We'll now take that as support. We're in at 171.80. It's an aggressive entry. Stop is now really tight behind entry, 171.70. But we want to add. Now, in terms of adding or for fresh positions, through the 173 level, okay? We get through 173.20. You can see it in my notes. I think we'll gravitate to 176, then up towards the top of my computer screen to 180. Okay, so good buy on a breakout for fresh positions. Now 180, that is an ambitious target, but I've said before, sometimes when your ambitious targets come off, and they will, yeah, it makes a really big difference to your bottom line profits. I've showed this one frequently as an example. GBP NZD, been trading it up since it moved above 190, and basically it's 1400 pips to the recent highs. Now, in the last video we did, we were long, but we come down, and that red here, when it comes to those bodies, these two bodies over here, stops us out. We come to a 20-day moving average. 20-day moving averages are often a good level to buy into in strong uptrends or sell into in big downtrends. So we just come slightly through it. We come back above it, we go long, and now we're poking at the 204 level. Okay, so we're in at 203.30. If you wanted to buy, I would go now through the high. So just clear the 204 level, then see if she runs. And I personally think target 210. So another 600 pips to go in our view. And I think in terms of the pound, if we get risk off, okay, it would give the pound an additional boost on all the commodity currencies. But yeah, fundamentally and from a central bank point of view, against the commodity currencies, I see the pound as bullish. Okay, right, we're on CAD JPY. Now, in terms, if you look at the price action, just scrappy and sideways, not too much volatility. When you look at the sentiment behind the chart, it gets a little bit more interesting. Now, in terms of, just want to go through what we were saying last week. We had resistance at 91, which actually gave way, and we were saying, you know, to sell a break of 90. Obviously, it didn't work out. We got through 91, but these candles here just small. I'd have expected more strength. So on this one here, we just sell. Okay, you can see it, 91.10. Don't even wait for the round number to give way. Next day we get tail poke up, unconvincing, then down. In terms of sentiment behind chart, speculators, big long position. We've got the potential for a bit of risk off next week. The CAD is overbought, so we're looking for a big move to downside. Hopefully the speculators to get run on stop. And if you were playing this one, I would sell a lower open, or you could try selling a rally if we rally back to 91 on weakness. If the specs really do get run, we should go to 86. You've got a support level in between. So from where we are now against stop, it's about 100 pip risk against 650 odd reward. But if we start breaking down, then that stop will come in very tight behind 91. So looks boring from price action point of view, but this could easily pick up in volatility next week in our view. Last pair I'll look at. I'm going to look at sorry, wrong page. Where am I? Euro GBP, and again, it's just in terms of selling price spikes. There's the ECB candle. That's a really strong follow through. Okay, but this is the peaking of the buying in our view, and we can sell short at 84.40. And we did actually liquidate out on this candle close here, waiting for this double bottom to give way, and then you get the big red down. Now this one, from a long-term perspective, looks really good in our view. 84 should be really good resistance. Where could we go to? Let me go to the monthly chart. We've been coming down, okay, and basically I think 80. So here you got some resistance over here with a big blue broke up in 2016. So if you looked at the pound against the euro, monetary policy, yeah, UK are going to be, they've already hiked rates. They're going to be hiking them even more in the coming months. We are not so convinced the ECB will, and I would argue UK economy in better shape than Eurozone. So yeah, I think the euro is a long-term sell. The spike has faded. We shall see. That's the video for today. Thanks for watching it. Take care. Have a good day.